Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're all having a fantastic weekend, and to our American viewers, I hope you had a great Thanksgiving. We're going to kick off with a quick review of the key events heading into next week. We're then going to do the relative currency analysis, and we're going to look at the scorecards for the currencies going into next week. We're then going to assess the individual currencies through the futures markets before moving on to the currency pairs selection process. And we're going to finish, as we always do, by looking at stocks, gold, silver, and Bitcoin. So let's start by looking at the economic calendar. The first piece of data we need to look at is the data which came out last week here, which is the interest rate decision from the Royal Bank of New Zealand. Now, they did raise interest rates from 0.5 to 0.75, and this, of course, you would think would be bullish, but we saw a big sell-off in the New Zealand dollar last week. I have my suspicions. I think that's just part of maybe a bigger deflationary move. However, for those of you who follow me on Twitter, you'll know I was actually a little bit ill last week and I wasn't able to trade and I wasn't able to sit through the press conference. So I don't really know what was said last week because I was ill. So if anybody has a good explanation as to why we saw that sell-off in RBNZ, feel free to tell me in the comments. I'd be interested to know because I was a little bit out of the game last week. However, going into this week, the why doesn't matter in terms of trading. The fact is we saw the sell-off, and that sell-off going into this week, New Zealand weakness, is going to be a theme we want to pay attention to. And that's regardless of what the catalyst was to cause that sell-off in New Zealand last week when we saw the raising of interest rates. So coming into this week, you can see there really is not too much we need to pay attention to. We do have some speeches, and of course these speeches from the central banks can actually move the markets. We have some CadJpy data which can move the markets. Aussie GDP data again can move the market, but these are not really pieces of data we need to plan for. Coming into Friday, we do have non-farm payrolls, so that's really the only thing to pay attention to going into next week. When you have non-farm payrolls week, you can see the markets basically flat across the board, but that doesn't really help us as it stands right now going into next week. It's more something, in hindsight, at the end of the week, you can say, okay, well, the markets haven't moved because of this. So it's not something we need to plan or pay attention to too much in terms of short-term trading next week. And if we skip forward one more week, you can see there are two pieces of data we need to pay attention to here. The interest rate decision on Tuesday, December 7th, out of Australia. And also that week, we have the interest rate decision out of Canada. So what that tells me is there's a greater risk in the next 2 weeks of the Australian dollar and the Canadian dollar basically being corrective. And if the markets are corrective, it's difficult to make money. So we really want to get involved in the markets which are going to move, be explosive. And as a result, when we go through the markets, the Australian dollar and the CAD dollar, I would be prepared to take opportunities because we may see moves in those markets, but I wouldn't go too heavy on them. If you put all of your trades or your whole Forex portfolio in Aussie and CAD pairs for the next 2 weeks, that whole portfolio might just go nowhere. So I might be interested in taking 1 or 2 trades, but I wouldn't go too heavy on the Aussie or the CAD pairs over the next 2 weeks. So let's have a look at the scores for the coming week then. And the first thing that jumped out at me when I put the data into the scoring system and we got the scorecards is that the currency markets are indicating deflation. And the reason I say this is because if you look at last week, you can see, yes, we had the US dollar, which was the best long position based on last week's data. And in fact, anybody who was long dollars last week would have done extremely well. So the process here really nailed that again last week. But you can see the difference between this week and last week is last week, the Canadian dollar was sitting in second place. We had commodity currency of the New Zealand dollar in third place. Well, if you look at the currency scorecard this week, you can see the risk off currencies are forming over on the left-hand side here or at the top of the scorecard, and the risk on currencies, commodity currencies, are forming at the bottom of the scorecard or over on the right-hand side here. When you get the currencies aligning like that, where you have all of the risk off currencies showing strength, and the risk on currency showing weakness, this is the currency markets pointing towards deflation. And that actually has implications for the stock market. In fact, we saw that at the end of last week with stocks selling off, and we're going to look at stocks in more detail later on in the video. So getting into the specifics then, going into next week, what are the best themes? Well, first and foremost, you can see the New Zealand dollar is the weakest currency, and we have a net change of -4. So New Zealand weakness is absolutely going to be one of the things on the top of my list going into next week, focusing on those New Zealand dollar short positions. I am also going to be interested in looking at Swiss franc long positions, as the Swiss franc has climbed to the top of the list here with a +3 net change, and it is the strongest currency going into next week. It's showing the best buy potential out of all of the currencies. I also like euro weakness going into next week as well, and also US dollar strength going into next week as well. So very similar to what we looked at last week. We had a big run last week. Maybe the US dollar corrects a little bit first, but US dollar strength is back on the cards. So really, the most simple way to break this down going into next week is the trades and the setups I'm going to be looking to take are deflationary style setups, and they're going to be primarily in the order of New Zealand first. So New Zealand Swiss franc I'll be interested in. We're going to look at New Zealand dollar. We're going to look at New Zealand Japanese yen. We're going to look at. I also would then look at Euro franc to the downside, Euro dollar to the downside. We can look at Euro yen to the downside. I would then be interested in Aussie franc to the downside, Aussie dollar, and also Aussie yen, and also CAD franc, CAD dollar, or in fact US dollar CAD as we would be trading it, and CAD yen. Now, we just have to remember that we do have those interest rates coming up in Aussie and CAD. Maybe that's why they're slightly more neutral anyway than Euro and New Zealand going into next week. And since the pound also went from being neutral last week to actually bearish to neutral, I mean, when we have a rating of 1, as I've said many times before, this is kind of bearish to neutral, bullish to neutral. It's not very bullish or very bearish, but you can, if you really want to, look for positions in those as well. Okay, so let's go and have a look at these currency pairs highlighted as the best potential setups for next week. Let's go and have a look at them in the markets and see how they're setting up. So before we look at the setups down in this area, let's quickly look at the individual currencies in the futures markets and just see what they're doing. In last week's video, I highlighted the US dollar to the upside as the best buy, and you can see we had a really nice rally. We took out the target at the 96.79, and that was pretty much the move in dollar last week. So any continued pullback in the DXY is simply viewed as another opportunity to look for further advances in this market next week. Next is the euro. Now the euro was highlighted as a good short from last week. In fact, it was highlighted as the best short from last week, and we did come down and we took out the target to the pip at the 1.11920. That was the low of the week last week. Going into this week, I do still like further declines in the euro as a theme, and any pullback is simply viewed as a near-term correction and an opportunity to look for bearish reversals down to the next key of support to the downside of target set, the 1.1149. Next is the pound. Now last week we were looking further declines in the pound, and the pound futures came down, took out the 1.3316, and that was the move in the pound from last week. Any pullback in this market is simply viewed very similar to the euro as an opportunity to once again look for bearish reversals and further declines down to the 1.3180. Next is the Swiss franc. Now last week and in previous weeks we were looking further declines in the Swiss franc, and we came down and we took out the target set in franc futures at the 1.0696, and that was pretty much the low from last week, and we rallied from that area. So if I update this chart, you can see that the new line in the sand comes down here at the 1.06940 above here, looking to be bullish, and this market is now technically structured to the upside, and any pullback in this market would be viewed as an opportunity for further advances to the 1.0906 first and foremost, and if we break through here, secondarily onto the 1.1014. So the Swiss franc itself technically is actually bullish, confirming what we looked at in the relative analysis. Next is the Japanese yen. Last week I was looking further declines in the Japanese yen, and we did take out both targets to the downside, and we rallied, to the point at the second target here in yen futures. That was the low of the week in the yen futures. Going into this week, if I reset the chart, and you can see we're still in the daily chart here, I am looking for further strength coming into the Japanese yen. It was not super bullish. If you look and you remember back to the scorecards, we had the Japanese yen as +1, but it did have a decent change. It was a +2 net change. So any pullback in the yen, I am going to be looking further advances into the 89110 and then onto the 0.0090270. Next is the Canadian dollar. The Canadian dollar last week, we're looking further declines to the downside. We did get further declines and we came very close to taking out the target. We haven't taken it out just yet. So I am looking for this target to now be taken out. And any pullback after this will simply be viewed as another opportunity to look for further declines into the 0.7754. Next is the Aussie dollar. Now the Aussie dollar, I was really kind of beating this drum in previous videos. I was saying to you guys, we failed. We had the strong dollar. We failed with the inverse head and shoulders. And when we looked at iron ore, you can see this was going to start to drag the Australian dollar to the downside. And Aussie dollar shorts were really something I suggested paying attention to in previous videos. We did come and take out the target, and we almost took out target 2. So going into next week, I do like the Aussie for further declines. Probably take out target 2 from last week and start to correct, and any correction will be viewed as another opportunity for further declines down to the 0.7012. And last but not least, we have the New Zealand dollar. You can see very similar to the Australian dollar, we had the inverse head and shoulders failing and then reversing to the downside. We took out both targets to the downside. And as I said earlier, this really is one of the key things I'm going to be keeping my eye on next week, this currency primarily. Any pullback in the New Zealand dollar is viewed as an opportunity to look for bearish reversals down to the 0.67260. Okay, so nothing out of the ordinary there, looking at the individual currencies, really just confirming what we looked at in the relative currency analysis and underpinning what we looked at in the scorecards. Okay, so dropping down to the 4-hour charts here, and we're going to look at the setups and the charts highlighted by the scoring system. So the New Zealand Swiss franc is my favorite market going into next week to the downside. This is the primary market I'll be looking to be short. It does need to be said that when you are going long Swiss francs, and if you're selling New Zealand Swiss franc, what you're doing is you're selling New Zealand dollars and you're buying Swiss francs, well, you are trading counter to the interests of the Swiss National Bank, who want to see the Swiss franc devalued. They do not want to see the Swiss franc rising in value. So you do always have intervention risk whenever you're trading the Swiss franc. So what's the best way to use it? Well, you don't have to be scared and not trade Swiss franc pairs, but if you take huge amounts of leverage with very tight stops and the Swiss National Bank comes and intervenes in the market is very likely just to blow through your very, very tight stop, and you can end up losing a lot more money than your initial stop loss was set to lose. So just make sure with the Swiss franc pairs that if you are trading them, you give yourself a nice wide stop. You are in a position where if the Swiss National Bank does come and intervene at any point and you end up taking a loss on the trade, you're not really losing anything more than you would be on any other normal trade. So I do like New Zealand franc going into next week. Any pullback in this market is viewed as an opportunity to look for bearish reversals. I'm going to be looking down towards the next key of support to the downside and the target set at 0.6249. And if we can break through here, going to be looking down towards target 2 at 0.6140. Now, as if the New Zealand Swiss franc couldn't get any better, you can see I've highlighted these levels here as green. These are levels which have a greater than normal probability of being taken out. They're high conviction levels. So I personally think there's a very good chance, perhaps not next week because it might be too far to come in a single week, but I do think we'll be coming down to the 0.6140 ultimately in the next few weeks. And this is really telling me, in fact, that New Zealand weakness is probably going to be a theme running all the way up until Christmas. Next is New Zealand dollar. Now last week we were looking further declines to the downside New Zealand dollar. We did take out the target set and we continued through this target last week. Any pullback in this market is simply viewed as an opportunity to look for bearish reversals down to the next key of support to the downside and the target set at 0.6725. New Zealand Japanese yen. Now, New Zealand Japanese yen was a market we looked at last week for a potential interest rate decision trade to the upside. Why? Because if you remember, we were looking at the yen pairs as a potential 1, 2, 3, 4, and then a fifth wave. However, what were the currency scores telling us in previous videos? Don't trade it yet. Be patient. Be patient on the yen pairs. Don't trade them yet. That's what we were looking at in previous videos. And what happened? In fact, the currency scores were actually giving us a warning about this failing to the downside, which it did on the interest rate decision. So we were patient on this, and what we discussed last week was if we got that interest rate decision rally to the upside, we could start to look for pullbacks and the fifth wave. However, the reverse happened. So going into this week, I would be looking for short positions and short setups in this market now, and I would consider what would look otherwise like a potential 1, 2, 3, 4 and a 5 to in fact not be the case. So any pullback in this market, I mean, look at the momentum in these markets we've looked at in the New Zealand pairs. These are seriously indicating further declines in these markets. So any pullback is simply viewed as the opportunity to start to look for bearish reversals down to the next key support to the downside and the target set at the 76.40, and if we break through here, we'll be looking down towards target 2 at the 74.79. Both these targets also green. So both of these, when I went through and did the work on them, these are high conviction levels. So I do think in New Zealand yen we're coming down to the 74.79 in all probability before Christmas. So those are the New Zealand pairs, and those are my favorite pairs going into next week. Let's move on to the euro pairs, starting with euro franc, which is the strongest currency in terms of the Swiss franc versus the euro. We are kind of grinding to the downside here, so we're quite close to this target. So what I'd like to see in euro franc is any pullback in this area before we take out the target will be viewed as an opportunity to look for bearish reversals down to the next key area support to the downside and the target set at the 1.0411. If we come down and take out this target first and then bounce, I'll be looking down towards target 2 at the 1.03150. Next is euro dollar. Now euro dollar came down and took out the target, and look at this, this was a high conviction target. This was a target which had a greater than normal probability of being taken out, just as we looked at in New Zealand yen and New Zealand franc. So all in all, this is a market we've been highlighting to the downside as one of the best shorts in the last couple of videos, and we've had really nice moves. Going into this week, you can see we've already started to bounce, so any continued pullback is great because this gives us better risk to reward opportunities down towards the next key area support to downside and the target set at the 1.1146. And the final euro pair here is euro yen. Euro yen is clearly trending to the downside, and we had this kind of very mini on the smaller time frames head and shoulders reversal here. Any pullback in this market is simply viewed as an opportunity next week to look for bearish reversals, and we've had euro yen off of the list here actually for quite a while, but it's back on this week. So any pullback, I'll be looking for bearish reversals down to the next key area support to the downside and the target set at the 127.31, and if we can get through here, we're looking down towards target 2 at the 126.410. So after New Zealand short positions and then euro short positions, the next one I'll be looking at next week in third place would be the Aussie short positions and Aussie franc. Really nice sell off to the downside. I mean, look at the momentum here. Again, this is a market which is just telling you that it's set for further declines to the downside. Any correction in this area is going to be viewed as an opportunity to look for bearish reversals down to the next key area support to the downside and the target set at 0.6507. Next is Aussie dollar. Now, Aussie dollar was a market which, as I said, I really was highlighting to the downside, saying to focus on those Aussie short positions because of all the things we discussed when we looked at the individual currencies. We did take out both targets, and look where we came down to. We came down to the higher probability target here, and in fact that was exactly more or less where we finished the week last week. So really nice moves to the downside in Aussie dollar in the last couple of weeks. Going into this week, you can see we do have some momentum coming into this market as well, although it's already very bearish. We don't really have any corrections in here. So any pullback in this market is simply viewed as another opportunity to look for bearish reversals down to the next key area support to the downside and the target set at 0.7011. And the final Aussie pair here is Aussie yen. Aussie yen, we have really nice momentum to the downside as we got that risk off rally in the Japanese yen at the end of last week. And you can see when you break like this with momentum, as I said before, this is indicative of further declines to the downside. So any pullback here is simply going to be viewed as an opportunity to look for bearish reversals down to the next key area support to the downside and the target set at the 78.95. Just remember, with the Australian dollar pairs, we do have an interest rate decision out of Australia in 2 weeks, so I don't recommend being too heavy in Aussie pairs over the next 2 weeks. Next, we're going to move on to the CAD pairs, and first we're going to look at crude oil. Now, last week we had a huge sell-off in crude oil, and we came and we took out both targets to the downside, and we exploded through those targets, and we ended up being about 12 or 13% down just in a single day last Friday in crude oil. So going into this week, I'm looking for further declines to the downside in crude oil, and any further declines in crude oil is going to drag down the Canadian dollar with it. So going into next week, any pullback in this market, and with such a big down day, I would be extremely wary about just shorting this at the bottom, because I think we could get a bit of a snapback in this. But any pullback in crude oil is simply viewed as an opportunity to start to look for bearish reversals. I'm going to be looking down towards the next target to the downside at a 65.48. As I said, further declines in this market are also going to weigh on the Canadian dollar. So with that said, let's look at the CAD pairs, starting with CAD franc. Huge sell-off in CAD franc last week, not only as we saw the Swiss franc strengthening, but we had that big sell-off in crude oil, which is dragging the Canadian dollar down here. So any pullback in this market, especially, I like this as we've, let me change this pen. I like this because we've been correcting here. We're actually breaking out of a correction. So any pullback in this market will be viewed as an opportunity to start to look for bearish reversals down to the 0.7184. And if say we come down first and then pull back, any bearish reversals, I'll be looking down towards target 2 at the 0.70951. Next is US dollar CAD. US dollar CAD is trending to the upside, and you can see we have this bull flag, and then we have a rally with momentum setting up another potential bull flag. So any correction in this market is simply going to be viewed next week as an opportunity to look for bullish reversals. I'm going to be looking up towards the next key resistance, the upside, and the target set, the 1.2879. And the final CAD pair here is CAD yen. CAD yen had a really big sell-off to the downside with momentum, and I do like, I mean, these are all showing us that there's a very good chance we get more yen strength going into next week, and that the deflationary environment that the scoring system is suggesting is likely to carry on into next week as well. So any pullback in this market next week is going to be viewed as an opportunity to look for bearish reversals down to the next key supports, the downside, and the target set at the 87.66. Just as with the Australian dollar, we have that interest rate decision in 2 weeks. So again, I wouldn't get too heavily involved in the CAD pairs, but it doesn't mean I wouldn't take maybe 1 or 2 trades in Aussie and CAD pairs. And the final pairs we're going to look at here are the pound pairs. So starting with pound franc, you can see we've had a nice correction in pound franc, and now we've broken down with momentum here. This is suggestive of further declines to the downside, and I'd be looking for a bear flag here. So any pullback in this market will be viewed as an opportunity to start to look for short positions down to the next key of supports, the downside, and the target set at the 1.2227. Pound dollar was a market highlighted in last week's video. We came down, we took out the target at the 1.3288, and that was pretty much the low of the week. So any correction in this market is simply viewed as an opportunity to start to look for bearish reversals down to the next key of supports, the downside, and the target set, the 1.3178. And last but not least, we have pound yen. Now pound yen looks to have started a new momentum wave to the downside, and so any pullback in this market is going to be viewed next week as an opportunity to start to look for bearish reversals down to the next key of support, to the downside, and the target set at the 149.210. And I have to say, guys, based on what I'm looking at going into next week, there are a lot of markets here which look like they're going to continue in terms of New Zealand franc. In fact, virtually all of these we looked at with momentum could very well continue to the downside. So I don't think next week there's going to be a problem finding trading opportunities. It may actually be the opposite. It may be trying to avoid trading too much next week, because I think there's going to be quite a few trading opportunities in these pairs next week. So let's wrap up the video by looking at stocks, gold, silver, and Bitcoin. Last week, the SPX was structured to the upside. We were still trending to the upside, technically speaking, but I have been sounding the horn for the last month that upside in stocks is limited. A deeper correction is likely coming, and we should keep protections in place, hedges in place, certainly not being long-only stocks. And this looks like it started at the end of last week. We had this big sell-off to the downside, this actually reverse trend. It was this double top here, which has now been confirmed in the SPX, having broken this low. And this does look like it's set for further declines going into next week. We have the currencies, which are also pointing towards deflation, which is going to be a decline in stocks. And so everything seems to suggest that we're going to get a continued flight to safety going into next week. And so I do go into this week with a bearish bias on SPX. Any pullback in this market would be viewed as a potential precursor to further declines down to the next key support to the downside at 4559.88, and if we break through here, could be coming all the way down to the 4476.44. Now, as I always say, this doesn't mean you have to go out next week and short the S&P 500. It may be the case that if you like to trade long only, you exit your positions, you're not involved in any long positions, or you trade individual stocks within the S&P 500 which are setting up to the downside. So please don't confuse this analysis here with saying short SPX. If you want to short SPX, that's entirely up to you, but there's multiple ways you can play this going into next week. Next is the Nasdaq. Now, last week we came up and took out the target set in the Nasdaq, and we had a large bearish engulfing day from this level, and that was the high in the Nasdaq. And for those of you who follow me on Twitter, I did tweet at the time that this was, based on everything I'm looking at, likely the end of this run in the Nasdaq so far. So coming into this week, I do have a bearish bias on the Nasdaq. Any pullback in this market is viewed as an opportunity to look for further declines down to the next key support to the downside at the 15,858.95, and if we can break through here down towards the second target to the downside at the 15,499.26. Next is the Dow Jones. Now, last week the Dow Jones was structured to the downside, and we came and we actually gapped through the target set at 35322.09. So we saw some real fear coming into the markets. I mean, you see the gap down in the Dow Jones. You saw the 12 to 13% sell-off in crude oil. This was indicative of traders acting now and thinking later. Nobody is prepared to sit there questioning the validity of these risk-off moves. They're just pulling their money out now, and they're going to assess it later, and this is what we're seeing. So we are seeing some panic coming into the markets here on Friday. So any pullback this week is viewed as another opportunity to look for further declines in this market down to next key support to the downside, the target set at a 34458.60. Next is the Russell. Now, the Russell also came down, took out both targets, and then gapped down on Friday with a big sell-off. So any pullback in this market is viewed as an opportunity to look for further declines down to the next key support to the downside and target set at the 2160.98. And last but not least, we have the Nifty. The Nifty was a market that has been highlighted to the downside over the last couple of weeks. We came down and took out the target at the 17437.95. Going into this week, I still have a bearish bias on the Nifty. Any pullback in this market is viewed as an opportunity to look for further declines down to next key support to the downside and the target set at 16724.75. So let's have a look at gold, silver, and Bitcoin, starting with gold. Now, this rally to the upside in gold, this was actually a major breakout highlighted in previous videos, and we came down very hard. We have not yet reversed in gold, but you can see the strong dollar is starting to take its toll on that gold breakout and on the silver breakout. So I am still technically bullish on gold since the trend is still to the upside, but gold long positions are now not really a high priority for me. Going into next week, I'd much rather be looking at those short New Zealand pairs, for example, than trading gold with a strong dollar. The one thing I will say is that because we're quite extended in the dollar may actually need to correct a bit first, which could see gold rising to the upside. But I think any moves to the upside in gold are probably now going to be capped, all the while we have the dollar rallying as hard as it is. So any continued pullback is simply viewed as an opportunity to look for bullish reversals. I'm going to be looking overall up towards the 1890.10. But as I say, just bear in mind, with a strong dollar, any moves to the upside in gold may well be capped next week, and there's no guarantees we're going to be coming up to the 1890.10 next week. So gold is not a high priority of mine going into next week personally. Next we have silver. Now, interestingly, silver has actually reversed to the downside, and we have here a working head and shoulders. So you can see And remember back to the Australian dollar pairs and the New Zealand dollar pairs when we had those inverse head and shoulder breakouts and we failed right at the breakout level. Do you remember what happened? Came all the way back, and we're now testing the lows of the original head and shoulders pattern. So we could very well see silver coming down to 21.52 in the near future, and this is also likely going to see gold falling as well. So this is why I'd be very careful with those gold long positions. In fact, I personally won't be looking to trade gold next week, almost certainly, because I don't think it's one of the best setups. So going into next week, in fact, I would prefer to be short silver than long gold. Any pullback in this area is viewed as an opportunity for potential right shoulder, and I will be looking for bearish reversals. I'm going to be looking down towards the NzdChf support to the downside, the target set at the 22.26. And last but not least, we have Bitcoin. Now, Bitcoin is a market that I have been bearish on in the last couple of videos, and you can see ever since then we have been coming to the downside. So very simply put, there's no change in the analysis on Bitcoin here. We're still making our way down towards the NzdChf support. We have a little bit of momentum coming in from this break here. Any continued pullback is simply viewed as an opportunity to look for further declines down towards the NzdChf support to the downside, the target set at a 49.317. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend. I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.